Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Eric Desai of Greenhouse Capital. Eric, thank you for joining us.
Thanks for having me.
So tell us how you got into early stage investing. What led you up to this point today?
Yeah, so I spent a good part of my career in M&A consulting and corporate strategy, often kind of larger companies. And then over time, just realized I could have a bigger impact and more influence, and a lot of the exciting opportunities in these spaces were moving a little bit more downstream. So I eventually joined a lower middle market consumer private equity shop. And it was a little more traditional PE, cash, kind of stable businesses, but on the smaller side. But in investing in those companies and kind of landscaping the market, we saw a lot of good opportunities that didn't necessarily fit our check size. And they were just too small, but nevertheless very attractive companies. And a lot of these companies as well didn't fit the VC model that you see today. So there was just kind of this gap in the market. So that's how I decided to join Greenhouse and connected with Pete about 4.5 years ago to really address a gap in the market that we saw in the sectors we focus on, food, ag, and environmental technologies.
So you can tell us more about what your fund focuses on. Can you give more detail about that?
Yeah. So we basically do kind of small or early growth capital investing into established business models promoting health and sustainability within the areas of food, agriculture, and the environment. There's kind of an economic revolution underway, and it's powered by technology and simultaneously just shaped by evolving consumer and system needs. And that's really changing the way we produce, move, and consume goods. So really at Greenhouse, we focus on this wave of change and partner with entrepreneurs that focus on improving the productivity, efficiency, and sustainability of the supply chains that we focus on.
And so what startups fit that fund's focus? What's the criteria you look for in startups?
Yeah, so overall, we typically invest in B and C rounds, occasionally A rounds. But these are startups with proven business models, early commercial traction, not just pilots. And it can be startups with just a product-only hardware and software business models, and then software-only business models as well. But we do a good team in place. We always realize there are gaps, and that's part of the reason we come to the table is to help fill some of those. But our focus is really around scaling the business, scaling sales, and getting a company. Typically, we'll come into a company doing minimum three if it's kind of a SaaS model, or 5 million in revenue up to 25 million in revenue. And then we're looking to scale those to triple that. And also, tricky part, kind of what we play in sometimes, is these earlier stage companies are unprofitable at the time we get into them, but we have a little bit more of a conservative lens and want to build strong growth, but understand achieving profitability is important. And that's a key part of our thesis as well.
So how is the industry, investing in food, ag, and environmental technologies, how is that industry evolving these days?
First of all, very rapidly. And there are so many kind of macro trends, which has partly led us to get into the space. But, overall, just some of the macro trends, I don't want to spit off just a bunch of random facts, but a few might help kind of address or give example to the magnitude of the problems we're trying to solve. But for example, world food production needs to double in the next 35 years with about 50% less use of land and natural resources. About 1/3 of that's produced is lost or wasted globally, and that number is even higher in the US. Ag represents 10% of global GDP, employs close to 40% of the global workforce, and accounts for 30% of greenhouse gas emissions. There are obesity problems. 500 million people globally are obese. And then millennials' habits are changing in terms of how they want to align their values and drive their purchase decisions. So really it's creating a landscape where the industries need to change that were really traditionally built around a certain kind of industrial level of scale and lower costs, where now quality and sustainability are big factors in that.
And how's the landscape for investing changing in food ag sector? What's coming up to be hot and what's going away?
Yeah, so these are relatively traditional industries that are often 3 to 5 or more years behind on the technology adoption cycle. But yet technology is becoming an increasingly bigger part of how things are done. And, Mark Andreessen said software will eat the world, but, I'd say it will also help the world eat. So at the basic level, the industry is fragmented, opaque, and relatively unsophisticated at times in terms of the processes. So they're actually just, the industries are behind on just sometimes basic process workflow tools. So a company we funded, Food Logic, which is food supply chain traceability SaaS platform. Speaking to some of their customers, they're still using Excel to track suppliers. They set calendar invites. It's kind of a very basic kind of manual process. So there's that low-hanging fruit that is an opportunity to just digitize more and create better workflows, kind of like a CRM. You're also seeing adoption of sensor technologies is relatively low, but growing. One of our companies is in the smart water management space, HydroPoint Data Systems. And water sensors are less than 10% of market penetration. And if we spoke a few years ago, it would have been close to 0 or 1%. We're also seeing evolution to service models. So a lot of these companies are hardware and software driven. We're dealing with real products, food and kind of industrial products. And so finding customers don't want to always have that upfront CapEx and worry about maintenance and repairs. And they just want to make sure things are just working as promised. And so we're seeing kind of an evolution of service models. And actually the Zuora IPO earlier this year, that was part of their thesis and their vision. It's not just SaaS, but everything is shifting to subscriptions. And we're seeing a higher willingness to adopt newer technologies in some of these traditional industries. So there's kind of a good shift in the industry where, for example, farmers, the average age of a farmer is 60, but second generations are starting to take over. And if you go to a water utility district where it used to be all kind of older crowd, you speak with them now, and it's mainly kind of sub 35-year-old people that are just digitally native. Also seeing great talent entering the space, and a lot of startups are kind of sometimes more global from the get-go. Corporations are playing a critical role in the ecosystem compared to some other industries or strategics. You're seeing some consolidation amongst some of the big ag players, but it's promising. All these technologies are starting to generate real strong ROI, which really provides a case for adoption. And so that looks promising there.
So what's your investment thesis for this sector? How do you approach so many different sectors and groups, and how do you make sense of that?
Yeah, so we do see kind of on the technology level a lot of similar technologies that can be applied to our areas of interest. That basically happens at all levels of the technology stack, whether that's kind of digitizing things, measuring, managing, and insights, optimizing, and automation. We tend to look at it as we approach these sectors around some key themes that we're interested in, and then we can then figure out all the players in the space and what technologies, where their adoption is on that in those themes, and where the most relevant technologies are now and then 5-10 years down the road. So some key themes we look at overall are food waste, food access. How do you feed a population that's supposed to be 10 million or 10 billion by 2050? Food safety. We look at resource management and kind of water management. Labor shortages are a big theme. And then understanding creative capital solutions to support these ecosystems.
So what are the challenges for startups in this space? We have a lot of entrepreneurs that listen to these podcasts, and they're trying to make a business run. And when they come into this area of food, ag, environmental, what are the big challenges they're going to have to overcome? Yeah,
so I think really, and it's part of our thesis as well and why we focus on these spaces, is you have to know what you're dealing with and properly kind of build companies and set expectations for everyone around the table, whether that's founders, management teams, and investors. For example, a farmer, assuming there's one growing season in his or her lifetime, has, call it 30 growing seasons. So there's the risk tolerance is low and there's little room to screw up. So I think it's really understanding that sales cycles can be slower and you're dealing with a different customer base. And so it's properly setting expectations and then capitalizing companies. We still see strong growth, 40 to 100% year over year, but you're not going to take over the world. And we don't underwrite our deals looking for unicorns and anything like this. And what you also find with entrepreneurs in this space is they're focusing generally on some big problems that I listed earlier and want kind of meaningful solutions to those. They tend to be a little bit more, not focus on just kind of the areas of sustainability, but want to build sustainable businesses in and of themselves. So it requires a different approach to investing and kind of a risk-reward trade-off that many traditional kind of Silicon Valley VCs might not be as comfortable with. But nevertheless, if you capitalize it appropriately at the right valuations and build towards profitability, or at least opening up your options, kind of optionality, control your own destiny, you can still see great returns for everyone around the table with sub $150 million exits.
For investors who want to get into this space, what do you caution them about the risks that are unique to this space?
I think it's just properly understanding the expectations in terms of cycles of companies and sales cycles as well and how they grow. That doesn't necessarily mean there are longer timeframes to exit. It's just right-sizing a business to meet the proper expectations. I also think to win deals, you do have to know the space. It's not just capital. And these entrepreneurs, they'll pretty quickly pick up whether you know what you're talking about in the space. And they tend to gravitate towards investors that really understand the issues they're facing. So I'd say pick a space. And in this, if you've decided that this space is compelling, really kind of build that strategy, network, and expertise that fits your thesis, and then enables you to better add value beyond capital to these entrepreneurs and the ecosystem. And I think in any space, but here it's critical, some of these issues I was alluding to, is it all comes down to proper alignment. And we found where we sleep best at night is where we have alignment with everyone around the table. So that's absolutely critical. And then I'd understand, how much capital will be required over the life of the company and set expectations on that.
Where do you see the immediate opportunities to pursue as far as which sectors or applications do you think are the low-hanging fruit, so to speak?
Yeah, I think some of the things I'm most excited about in terms of investment products, say, would be because of this evolution to service models. I would say certain kind of creative financing or even debt structures to allow companies to transition or adopt one of these service models. Because if you're not selling the product outright and you're recouping the COGS and then your profits in years 2, 3, 4, it does require you to kind of shore up your balance sheet to be able to finance this service model. So, and we didn't really get into it, but it's kind of, we're pretty conscious in our thesis about capitalizing companies at the right valuations so everyone can do well around the table. But we are seeing some companies that are getting ahead of themselves in their valuations, whether that's from the get-go or they've kind of raised too much money in the past. So as a kind of factor of that, they're just too highly valued. So I think in the next couple of years, you might see an opportunity for kind of like a recap situations fund. So that's on a investment product. But in terms of the industries, there are vast amounts of data being produced and analyzed, but that's just more data coming in. Even though penetration is relatively low, you're seeing a lot of momentum there. I think there are opportunities to kind of aggregate that data and then develop more advanced analytics and even AI to make it more insightful and actionable. In these industries, you're not necessarily selling technology or savings of a resource. I think that's what kind of clean tech 1.0 was doing. But here you need to communicate to these customers that are more traditional is really what's the end game for them and how do you make their life easier? So I think there are opportunities, and I'm happy to mention different companies in these spaces, but for kind of the analytics and AI around things. On food waste, pretty excited about food preservation technologies, areas for kind of waste reduction at the retail level, and then marketplaces within that value chain that try to unload food waste or food that would potentially be wasted. Excited about addressing labor shortages in ag. I think that for every farm worker that isn't around for the season and there are shortages, the farm typically would sacrifice $50,000 in income. So, and then there are areas of robotics. Robotics isn't always for us because it is a longer term play and more capital intensive, but we are seeing some robotics companies that are kind of the low end disruption. They're not full harvesters yet or anything like that, but it's that kind of Clayton Christensen where you come into the industry with that easy to adopt for the customer kind of low end disruption and then grow from there. We're excited about different financing opportunities. For example, Produce Pay. They're a lending platform to produce farmers and distributors who often can't access traditional forms of financing because produce is perishable and those farmers don't own the land that they farm. So they have a creative kind of business model innovation to be able to lend to that market. So, and then remote monitoring of infrastructure assets. Infrastructure is very dated right now, and there aren't always the funds to be able to invest in replacement. So it becomes all about kind of asset monitoring, maintenance, and performance. So we're pretty excited about some of those, particularly in kind of the water and waste management space.
That's very insightful. Appreciate that. In the final minutes of our interview, what else should we cover that we haven't?
Yeah, I think it's a really exciting space. I know sometimes it can be daunting for entrepreneurs or investors to get into the space because they don't necessarily know a lot about kind of the dynamics of it. But I think also a gap in the space as it's growing rapidly is just great talent coming in. So for those that are already well into their careers or people coming just out of college, I'd highly encourage them to look at these spaces of food, ag, and environmental technologies because there are enormous opportunities. It's a bit behind other industries. And so sometimes I don't want to go as far as saying you have an unfair advantage, but you can see how things will play out over time because how it has in other industries. So I think it's really exciting and there's some good opportunity.
That's very helpful. Well, how best for the audience to get back in touch with you?
Yeah. So best to email me at Eric, that's with a C, at greenhousecapital.net. And we're located in Sausalito, just along the water, just north of San Francisco in the Bay Area. So I work in San Francisco and Sausalito, but it's always nice out here. And I always encourage people to reach out and happy to meet up.
Great. Well, appreciate your sharing those thoughts with us today and hope to have you back for a follow-up real soon. And with that, we'll go ahead and wrap it up.
All right. Well, Hall, I appreciate you having me, and thanks a lot.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.